Yeah, hello and welcome to another update video about render. Price continues to follow here the path to the downside. Only yesterday we talked about it. I think it did go a little lower after yesterday's video. Now we see a little bit of a reaction to the upside, and you know, as long as we don't make a higher high and a higher low, we don't have a trend change. So the local trend is down. It looks corrective. I think this move down, which I'm currently envisioning as a C wave, that C wave could be an ending diagonal. I mean, bear in mind, this is a messy chart. This is not a high probability setup. Yeah, don't assume charts are always clear. There are certain charts which just are not, and I tell you, this is one which isn't clear. And the reason is that, looking at the bigger picture, this chart is dealing with or is working on a diagonal structure. So this entire move here to the upside, 1, 2, 3, 4, with the wave 5, in my opinion, currently in the making, which is still bullish. This is highly unreliable on the shorter time frames. We can of course look at structures, and as long as it's following this trend channel here, I think the focus can be on higher, but just be aware that the micro counts, what I show you here, is only temporary, especially in a diagonal structure. You have to expect headwinds, you have to expect choppy price action, and that's exactly what I always say, and that's always what we see here. Because in diagonals, you deal with unreliable corrective wave structures. In Elliott wave, the best setups are impulses and then subsequent pullbacks. But if you deal with a diagonal, it's not 100% clear which side is winning. I mean, there is a side winning at the moment, and the bulls are winning, but it's not as clear as in an impulse. And if we deal with a diagonal structure, then you have to expect a lot of headwinds, and it is it's a situation in which a lot of traders will be caught out. So in these situations, what can be useful can be reasonable. Now, that's no financial advice, but what is a reasonable strategy, in my opinion, is to double stops and to halve your position size. Yeah, that can help you more. Just because if you have very tight stops here, you can get caught out. It's just one possibility. Now, we are currently coming further down here, making lower lows, lower highs, and I think, as said yesterday, probably the C wave is currently unfolding, but it is too choppy, really, to be a C wave. Unless this is a 1-2-1-2 setup, but I rather count it as a 1, 2, 3, 4, maybe one more wave down in 5. We'll see. But ideally, in this B wave, so again, I view this move up that started that occurred between the 11th of May and the 21st of May. I view this as an A wave. I view the current move down as a B wave, and we could then rally in a C wave to complete this wave 5. Okay. And in this B wave, ideally, I would like to see a pullback to 228. If we don't get there, then at least I would like to have confirmation of the trend change by seeing a break above the 281 level, which is the wave 2 high. A break above the wave 2 high would indicate that it has already bottomed, and then we need a higher low to confirm that, for which I will then be able to give you a support area, and then we could go even higher here. What would that indicate? Well, it will be difficult. It would probably indicate that we are probably still in this X wave. Okay, it would probably reset the X wave, because we are looking at the move down that started here on the 21st of May as a wave W. Currently the move up as an X wave, and the move down in a Y wave within a B wave. But it can very well be that this was a wave W, and then the X wave could just be quite complex. X wave here, and then the Y wave down. That, I think, is sort of what I would probably go with, but bear in mind that corrective patterns, and this is a very, very corrective chart, they can morph easily. You don't have a strong edge. You might want to use other methods, for example, I don't know, trend lines, but with Elliott wave, you're probably struggling here. I mean, prices will still adhere to the fib levels, but you need to be more on your toes on this kind of time frame. that wave counts change frequently. And however, what we can use here is easy. Trend lines, we broke that trend line. A break back above the trend line would indicate that this local downtrend could be over, and then taking out that resistance level at wave 2, that peak, would indicate that we are back in an uptrend. We talked about support in this region here around the previous B wave low, so around about 241. I mean, we came down to around about 245, so we sort of react to that level. But overall, we are of course in that trend channel, in what I count or call a leading diagonal. And as long as price is constrained by this channel, it's going to follow it, but it will be very volatile. And as soon as we break out of this channel to the downside, I think this could be the wave 2, and then we could rally in a third wave afterwards. Okay, that's my update about Render. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.